Hello traders, this is Blake Morrow and you are listening to the week ahead video for June 2nd, 2019. Hope everybody's having a great weekend and looking forward to next week. Okay, now if you're on our platform or you're actually at our website, you'll notice that we still have our Memorial Day weekend sign up. It's interesting. The special we were running it till the end of this last week. I thought we were supposed to take it down this weekend. We haven't. That means my development team that's in Europe, by the way, is probably going to take this down as soon as they get in front of their computers Monday morning. So that means that if you guys still haven't tried out ForexAnalytix, this is the time to do it. It's a buy 1 month, get 1 month free, or a 20% discount on semi-annual and 25% discount on annual subscriptions. I have to make sure that we respect what we have on our site. So therefore, if you haven't tried it, you're lucky, because this is going down tonight, or in the next few hours, probably in European hours at some point in the morning. So anyway, take advantage of it, and when you do, download the mobile application, so this way you have all of our analysis at your fingertips, and you can get those apps from the App Store or the Google Play Store for your tablet or your mobile device. This way you have all of our analysis and our private chat rooms and everything on your mobiles, no matter where you go. All right, so let's talk about this next, and let me get rid of the data flash here. Let's talk about this next week. Well, let's actually talk about a few things before we even get into that. The dollar. The dollar was really strong going into the end of last week. If you look at the dollar index, we were pretty strong, but when you talk about what happened the very last day or on Friday, we saw a reversal, which is pretty critical here. Notice the purple line, okay, the purple uptrend line, and the green horizontal line. That puts us in a bullish wedge pattern. Now, when I talk about a bullish wedge, and you can see these red lines here, they depict on the breakout points. When you talk about a bullish wedge, just because it's a bullish wedge doesn't mean it has to break out to the upside. If I had to throw a number at it, and I always tell people I'm not a statistician. I don't go back and look back over time. I just give you 20 plus years of experience. I would say 60-65% of the time we break to the upside. The 30-35% of the chance we break to the downside. So can we break lower? Yeah, we can. Will we break higher? Chances are we're going to break higher eventually, but doesn't mean that we have to. And if you missed my argument on Friday on the free face webinar, I tweeted a link of the recording that I did on Friday, before we saw this move lower in the dollar index. I was explaining about how the dollar looks bearish, and it didn't look bearish actually at the time. The dollar didn't. It was, you have to imagine this red candle didn't exist. We were sitting up at resistance. But I was giving you my argument why I'm not bullish the dollar, at least against some currencies. And the gist of it is, because I don't want to spend the next 15 minutes explaining this concept, so you can go back and listen to the video if you want, because it was a free recording. It was a free webinar that we did, and the recording's out there. But the gist of it is, I think you have to be very selective, on the dollar pairs that you're buying the dollar against. Do I think the dollar is bullish against currencies like the Mexican peso? Yeah, I do. I do. I mean, obviously, the news that came out that you guys saw on Friday about, well, Thursday night, Friday morning, if you were in Europe, about the tariffs. And let me go over to the daily chart that's updated here. Here you go. You can see that big spike higher. So obviously, I like the dollar against the peso. But that doesn't necessarily mean I like the dollar against the euro, or I like the dollar against the cable. Those, I think you have to be a little bit more careful if you're buying dollars. Now, I know we have the ECB this week, which that is going to be pretty important going into Thursday. And I think you can be bearish the euro or bullish the dollar as long as we are below like this 112. I would say roughly about 112.30, 112.50. We get above 112.30, 112.50, and the risk starts to build that we're reversing. This is a descending wedge. Descending wedges, by by default, are reversal patterns. Now the question is, when are we going to reverse? And obviously, my answer would be, well, when we get above 112.30 or 112.50. Now, is there a risk of that happening this week? My opinion is yes. Sentiment has been so bullish the dollar recently, and the market is pretty short euros or pretty long dollars, that I think the risk is that we could get a reversal. The ECB, if the ECB is not as dovish as the market expects, it doesn't mean they don't have to be dovish. They can be dovish, but if the market expects the ECB to be extremely dovish and they're not, we could see a reversal here on Thursday. And I think the market's prepped for it. And while we hang out above 111, this support right here, the support zone, I think the risk is that we start building a base and turning. Now, again, I don't want to get bullish the euro or bearish the dollar until we see a move above that 112.30, 112.50, because remember, this is a descending trend line. So as it's a descending trend line, that means the breakout point, it's dropping every single day. Okay, so anyway, that's just something to think about when you're talking about like the dollar. Does the dollar look bullish overall? Yes, it does. Does it look bullish against everything? No, and that's why you have to be selective on how you're trading the dollar moving forward. You look at like the pound. The pound has been beat up pretty aggressively, and and I made the argument Friday morning before we saw the move on Friday, this hammer. And look at the hammer, by the way, that the pound established. Actually, I'm going to zoom in on it, so just give me a second. Let's go over here. So look at this hammer that we developed, and it's an outside day. That's, in my opinion, was a shakeout below the support. You can see this big support zone right through here. Whoops, that's not what I wanted. You can see this big support zone right through here. See how we took out all the stops below there and we ended up higher on the day? Yeah, that's a bullish sign technically. And if you look at, like, I guess you can zoom out here. You can see this longer term trend line really is for all intents and purposes holding. So if you look at that chart and you're like, well, I'm bullish the dollar, well, maybe the pound's not the right currency to be shorting against the dollar. That's when you start looking at the dollar Mexican peso, or maybe you even go over to the Aussie dollar and you go, well, we have a lot of Australia news this week, and if the Aussie, as long as it stays below 70 cents, which I think is the risk, we stay below 70 cents, it might be a better short on a rally from here. Okay, so again, I want to point out that the dollar looks bullish overall, but that could change. And let me just go back and actually let me go back here. Let me go back and reference the dollar one last time, and then I'm going to talk about the things coming up this next week, and I want to talk about the yen, and I want to talk about the S&P. So let's go back to the dollar index really fast. So here's your dollar index, and I want to be perfectly clear here is if we break lower, and you can just call it 97 on the dollar index, if we break below the 97 level, the dollar will start looking bearish, probably against most everything. And then you got to think, okay, well, where am I going to be bearish the dollar against? Well, you can start with the US dollar Japanese yen. Actually, let me grab the dollar yen here, and you can see how the dollar yen is breaking down. We have a flag pattern, by the way, guys. If you haven't seen the flag actually points to 107. So we have some distance to go to reach the the flag completion level in the dollar yen. Then if you take a look at the S&P, you can say, well, the S&P, just to get to the 38% retracement of the end of December move to the double top that you've got up here, that takes us down to 2,700. Now, I've explained to you guys that I am bearish equities. I thought we would bounce this last week, but obviously the Trump administration threw another curveball at us, so we just ended up breaking lower. Because I was bearish overall, I just thought we would bounce this last week, and we didn't. And the fact of the matter is, there's a lot of downside that could open up here now that we're below the 200-day moving average in the S&P. So the question is, well, how far could currencies like the dollar yen, could they go? Could we get down to 107 again? Or could we even test the 106 or even 105, these spike lows that we saw back in the beginning of January? Absolutely. So I think you have to be a little bit careful with not only the dollar yen, but all the other yen pairs, especially if the S&P continues to look weak. Now, like I said, I want to talk about some things that are going on this next week. If you look at the calendar, and there are a ton of there's a ton of economic data and things that are being released this next week. But let's start off with tonight, by the way, and I'm talking about Sunday night. We have manufacturing PMIs coming out of China that are coming out tonight. Now, Monday night, we have Australian retail sales, and we have the RBA rate decision. Now, let's talk a little bit about the RBA, because the market has really priced in 2, possibly 3 rate cuts out of Australia. Now, when the market's already priced that in, that means that it's not a surprise if the RBA is cutting rates and they remain dovish. So what becomes the risk? Well, the risk becomes, how about if the RBA is just not as dovish and we go, whoa, wait, we priced in 3 rate cuts, and now and we're a bank or an institution, now we have to, maybe we're just going to price in 2. Well, then that risk is the Aussie may actually get a rally back towards 70 cents as a result. So we do have the RBA on Monday night if you're in North America. It would be Tuesday morning, obviously, if you're in Australia. All right. We also have Australian GDP the following day, and we have a lot of Fed speakers that are speaking this week. We have like Fed Chairman Powell speaks Tuesday morning. We also have FOMC member Williams is also speaking Tuesday morning as well. On Wednesday, we have ADP, non-farm. Now remember, this is the beginning of the month, so we have non-farm payrolls at the end of the week. So we have ADP on Wednesday. We have ISM services data on Wednesday as well. That's going to be really important. And on Thursday, we're going to have the ECB meeting. So we have another central bank that's meeting, which we talked a little bit about, with in regards to the euro, in regards to the euro, and how about if the ECB just isn't as dovish as the market is expecting? Then next thing you know, you have the euro, back above this 112.50, and then you cap it off with a weak non-farm payroll, a weak employment report on Friday. If that ends up being the case, the market's expecting about 170 to 190,000 jobs to be created, and unemployment rate to stay extremely low at 3.6%. How about if the unemployment rate ticks up to 3.7, 3.8%, and we only create 50,000 jobs? Well, now if you had the euro that was already strengthening because an ECB that wasn't as dovish as we thought, then you get a weak employment number. That's a recipe for the euro to be trading up at at 113.50, 114 by the end of the week. And if you don't think that's possible, it is entirely possible, especially if you go back to my original comment about where to be short the dollar and where to be long the dollar. You know, I made the argument that I'm a little worried that the confidence in the U.S. dollar may be shaken a little bit because of Donald Trump's and the Trump administration's ability to use tariffs not as an economic goal, but as a political goal, and that could shake the confidence of those investors that are holding on to dollars. They may in turn think about maybe not holding as many dollars moving forward. So again, that was my argument without going into great detail on Friday. Go back and listen to the recording that we did. You can find that on our YouTube page if you guys follow, if you're on YouTube, or you can go to our website and just go listen to the webinars and go to the video playlists and go see our webinar recordings from last week. Go back and listen here. But guys and gals, it's going to be a very active week this next week, and I'm looking forward to it. I'll be on the webinar all week this next week, as I normally am, Monday through Friday. So you get my thoughts as we're going through the week. I know it's harder if you're just listening to this one video and you're like every Sunday, oh, what does Blake say? But hey, things change rapidly, and the market is constantly changing, and the dynamics change, and obviously the erratic behavior of the U.S. president really has thrown volatility into a tizzy this last week. So things are changing so quickly that it's important that you do listen to us live. And if you can't listen to us live because of maybe work or other obligations, you go back and listen to the recording that we put out a couple hours after the fact. So guys and gals, my name is Blake Morrow. If you found this video entertaining, educational, that it's going to help you this next week, give us a nice little thumbs up on the on YouTube when you're watching this. It makes us all feel better for putting these videos together for you for free. Also, subscribe to our channel so you don't miss any of our webinars. You'll get a little bell icon when we release a new video if you click that little, subscribe to our YouTube channel, and then click the little bell icon so you get notified. But guys and gals, have a great week. Enjoy the rest of your Sunday. And remember, if you're not ForexAnalytix subscriber, you might as well take advantage of this offer while it's up right now, because it's not going to be there tomorrow. All right, guys, have a great one. I'll talk to you soon. Bye-bye.